Hi, we are here to understand what to expect from RBI's monetary policy, the outcome of which would be known on 7th of April, and RBI monetary policy begins on 5th of April. In fact, the ET-Now poll does suggest that RBI is most likely to maintain a status quo in terms of rates again during the April monetary policy. However, the entire commentary in terms of the growth inflation trajectory, along with the commentary in terms of the liquidity management and the contours of RBI monetary policy normalization would be the key focus areas to be watched out for in terms of the overall commentary. We have already seen rising COVID cases leading to uncertainty in terms of growth trajectory. RBI's commentary here would be important, along with the fact that we are already seeing cost push pressures putting a lot of pressure in terms of the overall trajectory of the core inflation. So RBI's commentary both in terms of growth inflation dynamics could be fairly important. RBI most likely is going to continue to be supportive of growth according to most of the economists, and quite a lot of the economists also do believe that RBI would be retaining the FY22 growth forecast of 10.5%. However, what we should be watching out for, would RBI be revising the inflation forecast there? Some of the economists do expect some upward revisions, as the cost push pressures are certainly going to pose a good amount of threat in terms of the overall trajectory of the core CPI. So far, the government of India has retained the 2 to 6% inflation trajectory band, and RBI also wanted that government retains the same band. So yes, RBI's commentary here would be very important. RBI is also likely to ensure that ample liquidity stays in the system, and liquidity management tools, the use of the liquidity management tools, the commentary here would be important, along with the fact that how and when would RBI start the monetary policy normalization. Overall, Samiran Chakraborty of Citigroup does expect that MPC is likely to remain abundantly cautious in terms of growth and would be supportive of growth, and also they state that the focus would be in terms of liquidity management and forward guidance. JP Morgan's Sajid Chinoy also does believe that cost push pressures pose the biggest risk in 2021, and trajectory of the core inflation would play a key role in terms of monetary policy normalization in India. Besides this, of course, watch out for the RBI's commentary in terms of loan moratorium, and the commentary in terms of how would RBI ensure a smooth management of the huge government borrowing of rupees 12 lakh crore. So far, the bond yields did rise to 6.24% at a 10-month high just in the month of March, and bond yields have been hovering over the 6% mark. So yes, RBI's commentary here in terms of the smooth management of the government borrowing again would be fairly important.